In the UK, London's leading shares opened lower despite gains overnight on most Asian markets. Now, in the opening minutes, the FTSE 100 dipped 0.19%. The FTSE 250, which is seen as a better reflection of the UK economy, was also down, falling 0.19%. Well, Juliana will update us on what the numbers say at intraday as well as other news out there in London. Hello, Juliana. Good to see you. Good afternoon.
Good afternoon, Chime.
Now it looks like business people are in rather gloomy mood going by the latest survey from the British Chambers of Commerce. It's forecast that the UK will grow by only 1% next year. That's 2020. That would be the slowest growth rate since 2009. In the morning, we saw the FTSE 250 down 0.19%. Was that a reflection of what this forecast says? Bring us up to speed with intraday numbers.
Well, Jimmy, the British Chamber of Commerce have been going for 160 years. They also represent about 75,000 businesses here in the UK. So typically when they talk, the markets do listen. But, you know, their forecast is coming at the end of quite a long year. And we've seen various business groups as well as some very well-established economists really giving the same information. So it didn't really move markets. The FTSE 100 or the FTSE All Shares being called a stupor this morning. And that's really because, of course, everybody is sitting and waiting and watching what's going to happen on Friday after Friday the 13th, which, if you're superstitious, is not a great day anyway. But of course, they're waiting to see what happens in the UK, who will govern Britain. So the next 5 days could really shape the next 5 years in the UK, and that appears to be affecting the equities market. At intraday, the FTSE All Shares down 0.23%, the FTSE 100 is down 0.17%, and the FTSE 250 is down 0.60%. In currencies, the British pound is up on the US dollar by 0.25%, up on the euro by 0.13%, and up on the Japanese yen by 0.13%. So sterling is riding high on the hope that Boris Johnson will clearly get a Conservative majority on Friday morning.
All right, let's look at the corporate world. UK's biggest retailer, Tesco, is considering moving out of Asia with the sale of its profitable operations in Thailand and Malaysia. Analysts say the 2,000 stores could be worth more than £7 billion. Why would Tesco want to do this?
Well, £7 billion is a lot of money, Jimmy, for any company, especially Tesco. They still are Britain's biggest grocer, online retailer, but they've struggled in recent years. It's getting particularly competitive in the grocery market. We've had lots of cheaper alternatives coming in from Eastern Europe. And also as well, you know, Tesco are operating in Europe, and in Europe they're operating at a loss, and the only other international branch they have outside of Europe is in Asia. They've been there for 20 years. They've got 2,000 stores, as you said, and they have over 60,000 workers. But over the weekend they've had this offer which they're taking very seriously. Over £8 billion is a lot of money, and if the deal does indeed go through, then Tesco can put that money in other places and further develop the company. And of course, the fact that their shares rose 5.9% at early trading shows that, you know, their shareholders are really interested in this deal as much as the bosses are.
Still in corporate news, the battle for the ownership of takeaway food delivery service Just Eat has taken another twist. Prosus has increased its takeover offer for Just Eat. Where does that leave takeaway.com?
Well, Takeaway.com is still firmly in the lead, but, you know, this £200 million of an increase in the offer is getting shareholders excited. Takeaway.com are a Dutch rival to Just Eat. In July, they wanted to merge. They put in an offer of about £4 billion, which Just Eat, especially the owners, really like, because, of course, once they merge together outside of China, they would become the biggest online food delivery service. But Prosus, who are owned by the South African NASPA organisation, they came in with a late bid, which Just Eat are calling a hostile bid because they came in pretty low. And also as well, I think Just Eat, especially the bosses, they want this to be a kind of European pushed move. They're not liking the offer from Prosus, but shareholders, of course, are interested because it's the shareholders really that have the say. And the deal has been pushed back until the 27th of December. So now that, Prosus have upped the offer, they've got until the end of December. So it'll be a Christmas battle to see if the shareholders decide to go against Just Eat bosses and take the Prosus offer. However, the takeaway.com offer is just a little bit higher.
Anyway, thank you, Juliana. It's countdown to the UK election, so we have quite a lot to do this week. We're going to be very busy. Enjoy the rest of the day.
Thank you.
All right, we'll take a quick break. When we come back, Uganda's central bank leads its key benchmark interest rate unchanged. Details in a moment. To stay with us.